Welcome to this video, a simple setup guide for beginner stock traders. We'll be covering 3 must-know technical indicators to help you start your trading journey. Indicators are the foundation of technical trading. They can truly be your best friend when navigating the market. Technical indicators are mathematical calculations based on price, volume, or open interest. They help filter out market noise to reveal underlying trends. They are used to identify trend direction, gauge momentum, and find optimal entry and exit points with objective data. Our first must-know indicator is moving averages, the trend-following baseline for many traders. Moving averages, or MA, help smooth the price action by visualizing the average price over a specific period. The simple moving average is a simple average of prices, while the exponential moving average reacts faster to recent changes. For a simple setup, use the 50-day MA for midterm trends and the 200-day MA for long-term health. Look for the golden cross as a bullish signal and the death cross as a bearish signal. Next, we'll look at the Relative Strength Index, or RSI, which is key for measuring market momentum. The RSI acts as a momentum gauge. A reading of 70 or above suggests the stock is overbought and may reverse. A reading of 30 or below suggests the stock is oversold and ready for a bounce. Use the standard 14-period setting for daily charts. Our third essential indicator is the MACD, which is a powerful combination of trend and momentum analysis. Mastering the MACD involves watching for the crossover, which signals a buy when the MACD line crosses above the signal line. The histogram visualizes momentum, and for full context, always use MACD with volume. Here is an indicator comparison guide. Moving averages are lagging and best for identifying overall trends. RSI is leading and best for spotting reversals. MACD is a hybrid, excellent for entry and exit timing.